The CFPB just dropped two significant updates on the same day. Both have real implications for lenders, credit bureaus, and anyone who touches consumer credit. Let's start with the bigger one. The CFPB's consumer complaint system has been completely overwhelmed. In 2019, the Bureau received 150,000 credit reporting complaints. By 2025, that number had grown to 5 million, a 3,700% increase. The system is stressed and legitimate complaints are getting buried. What's driving it? There are more consumers that are more educated and informed, but there is also a large increase in credit repair companies that rely on CFPB disputes as part of their process for cleaning credit. Also, a wave of social media influencers telling followers to file complaints, and AI tools being used to blast the system with bulk disputes on behalf of consumers. The impact has also been felt directly at the credit bureaus. Equifax, Experian, and TransUnion closed more than 2.1 million complaints with non-monetary relief in 2025, up from 1.3 million the prior year. Complaints must be answered, even questionable ones. The volume is real and it's bogging down the system for everyone, including consumers with legitimate issues. So, what's changing? The CFPB is implementing a few specific reforms, two worth highlighting. First, enhanced identity protections. The Bureau launched two-factor authentication, requiring users to verify both their email and phone number. It's also building address validation into the submission process, so companies know they're responding to their actual customer. Second, consumers must now exhaust the dispute process directly with the credit bureau before filing a complaint. The CFPB is also directing consumers to wait 45 days after filing with a credit reporting agency before escalating to the bureau. The goal is to route complaints through the proper legal channel first. The CFPB is also investing in better APIs that will share complaint information with companies faster and more efficiently, reducing the backlog and improving response times. These changes clean up the noise so legitimate consumer issues get the attention they need. For the second update, 9 federal financial regulatory agencies, including the CFPB, the Fed, and FDIC, finalized a joint rule establishing common data standards for financial reporting. Effective October 1, 2026. This means financial companies and institutions will submit data using standardized formats, common identifiers, and machine-readable standards across all of these agencies. Same language, same format, across the board. It won't change reporting requirements immediately. Each agency will incorporate the standards into their own rulemaking over the next 2 years. The regulators want clean, consistent, comparable data, and this should create efficiencies for both the agencies and institutions submitting data. This is Auto Finance Pulse. Subscribe and stay current.